Hello. Good evening, guys. Yeah, we are here again today on another episode of Trading Digest, coming to you live with this live session. Today, Sunday, the 12th of October. Okay, we'll crack on shortly. I hope you've all been doing great. We've been doing great for the past weeks. We are in October now, and then I believe we've been conquering the markets. Okay, right on. Let's crack on. So we have here on my charts, I have gold on my charts now. So once again, if you can hear me loud and clear, let me know. Yeah, loud and clear. Great. Okay, let's crack on. Up. If we look at this, is the monthly charts on gold, and then it's a pair that has been going up. So it's gold more or less is considered as a safe haven where when the other currencies are not doing so well, people tends to invest or put their investment in gold. And we can see here that even on the monthly, we can see that gold has been a pair that has been going up. If it pulls back, not so much, and then keeps going up. So this is way back in 2001. From there, it's been going up, had a pullback, and then been going up since. So let's look into gold furthermore. Let's go into the weekly charts. So, and one thing about gold is it's a pair that is making all-time highs now. So with this all-time highs, sometimes it's a bit challenging to trade it. Based on the fact that there is no past data to be looking at to make decisions based on where we want to take trades to. But again, there's a way we can tackle this and then make the most out of it. Even though we are making all-time highs now, there's a way we can tackle this, right? Whereby we will be using some key levels. So gold, and then the indices, they are all making all-time highs. So these are pairs that we can all trade, and then also use these key levels that we can plot on the charts and target these areas as gold make its way up. So on here is the weekly chart. Clearly we can see that we had this push up from this level where gold stayed here for some time. And then we break out of this area and then making new highs. So there is a school of thought that gold is going to hit 5,000 ounce soon, or from this point on, is going to go up and then hit this key area or this price tag. It's been going up. It's a pair, or it's an asset that's been going up. So the best way to trade this pair is mostly to look for the buy positions, as it's it's if we look at the past history, we can see that it's been going up, and then of course we do have times that it pulls back, but if we consider the actual trend, it's been on an uptrend for years, or for years now. Yeah. So with that said, let's look into how we can approach this asset and then make the most out of it. So there are certain key levels that we can make use of in terms of using it as our target, and then also as it pulls back to those key levels. So it's also very important to trade and then use these key levels as we go along. So on the daily charts, we can see that we had this bearish engulfing candle presenting itself here last week, and then we currently have, I think on Friday we had a pullback into the area where it started from. I believe some people are waiting for a big sell-off, which it could be a bit dangerous, because currently we are in an uptrend. So on the daily, on the monthly, weekly, we can see clearly that price has been moving up and up and up. If we go down to the 4-hour time frame, this is what we currently have. We can see that we've had a break of structure right here. Whoa. Okay, let me hide this for now. Use something else. Okay, so we have this break of structure right here, and then with this break of structure, we can also identify that there is this supply zone here. There's this supply zone here. That's with that supply zone, we also have this area of imbalance attached to the supply zone, which we've had it partially filled up until this level. So we still have this area to be completed, to be filled, and probably tap into this area. Again, with that said, as we've been talking about gold being in an uptrend, again we also have some pending areas of imbalanced demand zones resting below price here. So currently we've created these areas of liquidity. We've created these areas of liquidity here, and already tapped into this area where we had a pending area of imbalanced demand zone. This on the 4-hour time frame. If we go on the smaller time frame, that would be much clearer. So with this here, we have another pending area here. We had this break of structure, and then with that break of structure, we'll use this our demand area. So this is a pending area that we could expect price to come and tap in here, and then probably continue the uptrend. But again, if we look at price, let's clear the charts from here. If we look at price as it is now, we can also see that there is this area or this trend line that it's been respecting, gold has been respecting, So let's just put this. Okay. Yeah, I hit all my levels, but once I use any of these, it brings it all back. Anyway, so these are the key levels that I was talking about. So this is the trend line area that I was trying to draw. So this is the trend line area which gold has been respecting. It had a one touch, second touch, third touch. So we could have another touch or push from here. So if we truly looking to sell this market here, so with this break of structure, the origin is right here. The origin, we can identify it to be this area here. So this area hasn't been tapped in yet. And then if we read along the line, we could identify many other areas that hasn't been tapped in here. Right here we had the break of structure, and the origin hasn't been tapped in yet. Another area that we had the break of structure right here, and then the origin hasn't been tapped in yet as well. Okay, so that is good, and we can see that it's been on an uptrend, moving higher and higher. So we always say that we trade what we see. So no matter what, we trade what we see. So now these are the key levels that I was talking about. I think I showed these levels on the indices last time I was on NAS and the other two indices that we have. So the idea is to pick an odd number after the 3. This is gold. So currently at this level, if we go further down, we can see that price always made use of these levels anytime it got there or had a rejection or some form of reaction from these levels. So at this level here, we can see that we had we can see that we had at this level 3,150 key level. We had price coming from below here, got to this level, and then reacted from there. Had a first touch, pushed down a bit, and then came for the second touch, and from there we sold, or we traded back to the key level 2,950. So the idea is you picking the after the first digit, the second digit after the first digit, you pick an odd number. So from 750, the next odd number is 9. So from 900, you just add 50 to it. So from 900, the next odd number we can identify is 3001. Then we add the 50 to it to make 3,150. So these are the key levels that we plot on the charts to use this as our target zones, or where we can be working towards. So this in itself will give us a range where we can trade in between it. So from the key level 2,950, from this key level here, the next area that we could have targeted was where it came from, the 3,150 area. You can see how price got to this level and then broke above it. And then if we also consider how it's crossed above this zone, you can see the size of the candle, that it was a strength candle or a powerful candle that broke above it, came back to test it. So once we broke above this zone that it tested there twice, so the third time we broke above it, what happened? From here we moved to the next key level, which is the 3,350. That's the next key level that we have. That price got there, reacted from it, broke above it, almost getting to the next key level, but pulled back back to the previous zone, and then stayed here for some time until, let's see if we, so we can see how many times we have been testing this key level. Even if we break above it, we come back and then we hold there. See how we held at this key level until we broke above this key level with this powerful strength candle. This is to tell you how strong this key level is, because if it's not a strong area, the movement would have been just these kind of small movements or these small candles that will push above it. But because it's a major key level, it always requires a powerful move to cross it or to move above it. Yeah, so that is on the 3,350 key level. So from there we move to the next key level and see what happened. That's the 3,550 key level. The same thing happened again. We had a pause there before we moved from there to the next key level. The next key level we can see is 3,750. Guys, these things work, and then it's better we make use of it than to just say gold is making all-time highs and then we don't know how to trade it. This is how to trade it. This is how to trade it. So we can see how gold is reacting from this key level as well. It reacted here, then held for some time before it took off from here. So once it took off from here, the expectation is to target the next key level. So the next key level was 3,950, and then see what happened there again and what is happening there now. So once we broke above it, we got there, we had a pullback, broke above it, and then we went past it and then came back. Then see how price is being rejected with these wicks here. See how price is being rejected with these wicks here at this 950 key level. So from this point on, the next area of targets is the 4,150 key level. So that is how we can go on and on and on. So from the 4,150 key level, the next area of targets that we can plot is we pick the next odd number. So from 100, the next odd number is 3. So 350, we add 50 to it to make 350. 350 is right here, right there. So let's make it exact. Let's remove this. Okay, so from this key level, that is the next key level. So we can be targeting, as so long as gold keeps on going up, we could use this to make some money out of the market. So let's, for instance, let's measure what's from this key level to the next one. We're looking at looking at 197 pips or points, as you may call it. But again, going by simple mathematics, this is this key level is 750. 750. So from 750 to the next key level, probably it's 200 points. The same way from here to here, it's another 200 points. So every 200 points that it makes, it kind of halts or have some kind of reactions from there. So let's be on our watch out and then see some of these things. But again, we have a specific way of trading as well. So with this we can see that if we go on the maybe on the 1 hour time frame, let's see if we have we can see that this is the most recent break of structure here. So as I said, we trade what we see. So if this is the most recent break of structure, then our target area is from here. We have the last indecision candle right here. So we just pick the high and low of that particular candle. So that becomes our supply zone. That becomes our supply zone. And we can see that there's this big imbalance right here. This imbalance right here. This imbalance sitting right here. This big candle. So as we all say, so this will need, once this was put in the market, this will definitely need a rebalancing. If it's an inefficiency, it will need to be efficient. So we have price coming all the way back to this zone to rebalance it. So again, one thing that we should also be aware of is we are in a bullish market. We are in a bullish market. So if we're going to consider selling from here, we definitely need to be careful, because again, we also have this area of imbalance right sitting right above here. We have some imbalance sitting right above there. So, and these areas act as magnets. It acts as a magnet, drawing price to its as it could. So from this point on, we have to, if we want to take a sell from here, then it must be it definitely must be a confirmation entry. So our confirmation entry is where we have this. So we could expect price to either clear this imbalance here before, if it's want to sell, it sells off, or if it's not going up here, all that we have to do is to make sure that this is the last low that it was put in. So we have a break below here, and then we come back for a retest or to the zone before we look out for a sell. So we must use confirmation entry in terms of what we want to do if we want to sell this market from here. That is if it's going to sell. So we, as I said, we only trade what we see. We are not going to be trading our feelings, our beliefs. We're going to trade what we see. So currently we can see the strength of the strength. So one thing that we can also be looking out for is the how to gauge momentum. How to gauge momentum. So looking at this price action here, we can see how many. Let's measure this. Let's measure this. So from this point on, we made our way up to here. It took how many? 2 days. 2 days, 4 hours to get to this zone here. And then within a short time, we had price. How many hours from here? This took no, I think I used the wrong one. Yeah, let me use. Okay, so from here to this point took, let's say, how many hours? So we are on the 1 hour. So from, okay, I think I've overextended it. simply, let me just count this. So from this point on, 1 2 3 4 5, it took 5 hours to clear a data that was put in place for how many? 2 days, 4 hours. It took only 5 hours to clear all these data. So that tells us something that we can also be looking out for. So you can see that the sellers came into the market with strength, with power. And then if we also look at how price struggled to get back here, it's giving us some form of clue that we could possibly get some sales from here. But as again, this is a bullish market. This is a bullish market, and if we look at the movement of gold, it's more or less, it's been moving this way, going up. But I'm just referring to this, the momentum that we took to get to this level. So with this momentum, if it's going to continue further down, we also want to see that this low is taken out. But with this momentum that was put in place last Friday, if we consider this momentum with this movement up, this looks more powerful than this one here. So with that said, we could expect some sales from here. We could expect some sales from here, but with all that, what we will say is we will trade what we see. If we should get a break below this point here, if we get a break below this point here, we've created this liquidity area, at least we'll expect price. So this point here, I would say if we get a break below here, we come back for a retest to this zone. This is where we'll probably be looking for opportunities to sell to these target pending areas here, to these pending areas below here. Okay, so that is on gold. That is on gold. Yeah. So as again, we could be looking to get into gold for buys, more buys, instead of selling, because with the introduction I gave earlier on, gold is an asset, or gold is considered as a safe haven, where when all the other foreign currencies are not doing well, people tend to put their investments on gold. And we can see that the last, if we go on the monthly, for instance, again, we can see how gold has been traveling. This is way back in October 2023. So we are in 2025 now. Yeah. So so for the last 2 years, when price got held here, we can see how gold has moved. If we consider all these years of sideways movements here, from this point on here, gold has moved so much more than what it did in this since 2012, 2011. Yeah, from this point on was 2011 until 2023, when it broke out of this area and then made this movement. So what I'm saying is it's an asset to worth considering for long-term investments, because there's a school of thoughts that's saying that it's going to get to 5,000, then from there get to 6,000. So we can make the most of it as price make its way up. So for instance, if we if you knew that from this point on gold was going to make all this move, and then even if you put in one lot size here, from this point on to here would have been worth thousands, if not millions. So this is what I'm talking about, and still we still have some targets to hit. We still have some space to move up, so it's not too late. So that's what I'm saying. If we get a pull back or a retracement and it's giving us an indication of going up, that is a time to probably be a swing trader or a position trader, where you can put in some positions and then leave it to run as long as it stays in. Okay, so that is on gold. Yeah, so let's see what is our expectation this coming week. What is our expectation? So I think I've already put some things down, that if we get a break below here, we've already tapped into this zone. So once the market's open, we'll just have to see what the reaction that will come up. Probably if we get a bearish engulfing candle from this point on, we could take in some sells targeting this low. Again, we have put in this area of liquidity that we would expect gold to come back to clear this area of liquidity, and already we also know that we have some pending areas below here. So, and this is a trend line that I put in place. So if we come back here and then break below this trend line, we could come back for a retest, and then we can further target these zones. So this is supposed to be a demand zone. It's supposed to be demand. So attached to this demand, okay, we'll take this from here. Attached to this demand, we also have this area of imbalance. Which is pending. This imbalance demand zone is pending. It's pending, so we can expect price to revisit here. Other than that, from this point on, we've had a pullback. We are in an uptrend. We've had a pullback to this 950 key level, and you can see how we've been rejecting from here. So there's a high chance or high probability that we could continue from here, making new highs to the next key level. We get a bearish engulfing candle from this zone here, then we could sell. If not, and then we get a bullish engulfing candle from here, then we could probably continue the uptrend. So now this is the next area that we could target if price breaks above here. If price breaks above there, if we have a break of structure here, then we want to wait for price to come back and then give us an entry at the origin where it's started from. So probably we could have some form of consolidation here before it pushes up. So whatever it puts in here, if we get a bullish engulfing here or a bearish engulfing from this point on, we know what to do. So if we have a bearish engulfing candle, then we're going to sell. If we have a bullish engulfing, then we could also engage in some buys from here. All right, so that is on gold. Let's look at what next can we look at. I believe I've exhausted everything on gold that we can think of. All right, so let's have a play around BTC. Let's play around BTC. Okay, we have let's start from the higher time frame. Okay, so on the higher time frame we can see BTC also this week putting an all-time high. BTC also putting an all-time high, and if we also considering, we can see that tapping into the imbalance demand zone. If we go on the slower time frames, I think that will be much clearer. So let me go on the 4-hour time frame. Let me go on the 4-hour time. So on the 4-hour time frame, you can see that there's this imbalance that was left here. Imbalance that was left here, and then liquidity resting here all along here. So we had this candle coming all the way, tapping into this imbalance that was left. So it was a pending area of imbalance that got filled, or we had it tapped in. We can also identify some imbalance still resting here, some open price range still here, right here. So with this long wick put in place, and then after that we having a pullback, so we could have this long wick filled. We could have price revisiting this area, filling this long wick that was put in place on Friday. So looking at where we are now, we can see that, so this on the 4-hour time frame, we can see that we left this area of imbalance here as well. We left this area of imbalance right here, and then as it is now, we have a partially filled area. So it's been partially filled. So and then if we consider the momentum at which it took off from here as well, comparing it to this move, we can see that the momentum from this point on was quite strong. So what I'm thinking is, what I'm looking at now, we have this area. This is the last candle before the bearish move, so that will be the zone, the supply zone, and then attached to this supply zone, let me take this off. Attached to this supply zone, we also have imbalance attached with it, some imbalance right there. Okay, so we have this imbalance right here, and then currently it's been filling. So all along to this point, we had these imbalances that is all been resting there. So looking at this, we had this area of not this one I want. If we look at the most recent structure break, we can pick on this. Yeah, we had this break of structure right there. Break of structure right there. This on the 4-hour time frame, and we can also identify another break of structure right here. So we put in this low, and so this was the first area that was taken out in terms with regards to the movement down. Okay, so with this, if we're using this, that is the zone that we want to look out for. So currently we have these imbalance areas that needs to be filled or that needs to be tapped in. So if we're going to consider anything of a sell, we want to either see price clearing out all these, tapping into this zone, and then we aim for this. We aim for this. So that is what I'm seeing on Bitcoin currently. This is on the 4-hour time frame. So if we further refine the zone, so this area here will now be our supply zone. So that's the last indecision candle from there, and then the imbalance area will be right here. So as it is now, we have these areas of imbalances along the way that there's a high chance of price coming back to fill this or tap into these zones. So on the 1-hour time frame, we can see that we currently have an efficient market right up until this point where price is making its way. So it's all efficient. So the inefficiency is from here to here. That's where I've marked on here. Let me take this blue line off. So the inefficiency that we can identify, or the imbalance, is where it's shaded here. So apart from that, if we read the structure properly, there is some imbalances here as well along the way, all the way up here. So ideally, we want to see price coming back to clear all these or fill these imbalances here before we sell off. Other than that, we could, if we get a confirmation entry here, maybe if price wants to just tap into this and then sell off, we want to see price doing this, filling this up, coming back to, this was the last low that was put in, coming back to break this structure, and then like that. So if we have this scenario played out, then we're going to follow this plan to sell down. If we have this internet playing up, okay, we are back. So we have some pending areas resting here, and then liquidity areas as well. So these are the scenarios that we could have happening. So all we want to see is if we have this playing out scenario. Okay, if I call this scenario 1, if we have price coming, clearing all this liquidity from up until this zone, then we look to sell from here, targeting these low here, targeting here. Or if we have this scenario here where we have price maybe filling this imbalance area and then breaking below this low point that was put in, then we expect price to come back to the origin. If this happens to be the origin here, then we want to be taking ourselves from this origin down. Okay, so this is on BTC. Other than that, the third scenario could be that we could move from here, break above here, break above this high that was put in. So that will be a change in the state of delivery to continue to the upside. So once we have this taken out, so this will now, if this happens, if this third scenario happens, then we're going to have more or less an inversion fair value gap. So once we break above this area, we come back to test this zone, and then the entry is going to be from here. So guys, these are all scenarios that we are planning and then waiting for whichever one that comes up, then we play according to it. We play according to it. We play according to it. So I believe this will be a guide for us as we go through the week. So let's be on our watch out for some of these things. I will now look at let's look at GJ. Let's look at GJ. So GJ, British pound yen. So currently we had last week when the market opened, we had this gap up that took us all the way up to a zone. As we can see, this has been a zone that we marked some weeks back. If I go back on the daily, let's start from there. Let's start from there. So on the daily, we can see how we caused a change of character here. This change of character happened way back July 2024. July 2024. So it's been over a year now. It's been over a year. And then if we look at the momentum at which we broke down from this level to this low, and then we measure also the momentum at which we are taking, see how long it has taken for price to get back to this zone. So with this kind of scenario, I am thinking, or I'm more of the fact that we had a strong push down and then a very slow retracement to the zone. So once we have this, what this tells us is the sellers are in control. The sellers are in control. Even if we look at how long, so if we look at how long this took from here, from this point on, we should measure from this point on, this is 190 days of data that was put in here. And then let's see how long it took for this data to be wiped out. 190 days of data that was put in here. And let's see how long it took for this data to be wiped out. So from this point to here, so from the 190 days of data, it took 25 days to wipe the whole 190 days of data off. So after that was done, then we have almost over a year worth of data to come back to this zone that caused this break of structure here. So this just tells me that we have the sellers in control. Sellers in control with this kind of scenario. We have the sellers in control. So over here, we're looking at this gap up here. We had price gapping up to this point, to this area that has taken almost over a year to get to. It needed some much strength to complete the job. So we had this gap up to this zone, and then after that, this is the daily time frame. We have a bearish engulfing candle now after we tapped into the zone. So this coming week, I believe, or I'm of expectancy that this gap that was put in will be filled. So this could be, so we could have this kind of scenario where we will put in a new high, then once we put in a new high here, we could expect this low that was put in last week to be taken out. So once we have this low taken out, we expect price to come back to the area of origin, or to fill some imbalances that will be left here. So this is where we look to take our entry. So this is where we look to take our entry. So we want to see if price breaks below here. Once we have a break of structure, once we have a break of structure here, we want to see price coming back into the zone, or to tap into some form of imbalance that will be left here. So the entry for a sell could be from this zone, targeting the initial area, could be here, targeting here, and also I think we have this pending zone here. So, and then as we can see, we have this area, whole area here. So it could happen like this to break out, because there's liquidity resting here after almost 2 years of sideways movement. There's liquidity that has been built up here, so we could target this area of liquidity. So back, clear all these areas. If we look at, so the liquidity areas are all sitting right here. Let me draw on this. We have liquidity areas sitting all over here, so we could expect this internal range of liquidity to be cleared as we see price coming down this way. See price coming down that way. Okay, so I believe this throws more lights on the expectations for the week. So we have 3 minutes left on the clock. Any questions, anything that you want me to have a look? So before I go into let's look at NAS. Yeah, NAS have decorated it with all these key levels. So it's the same thing that we're talking about on gold, that also happens on NAS as well. So if we look at this is the 4-hour time frame. Whoa, is that what happened on Friday? Is that what happened on Friday? That was a big move down. Right, so I believe this was a news item, I guess, that caused this bearish movement to take out all these areas of liquidity. So with all this move, let's see where we got to. So what key level is this? So I think this is the 950 zone. This is the 950 zone. So from this high, so it got to, price got to this high. This is NAS. So where it got to and stayed, we're talking about the 25-150 zone. 25-150 zone. Let's put this. Oh, what happened? Yeah, so that we can see how, so this is on the 4-hour time frame. We can see how price reacted from the 25-150 zone, and then it broke down, clearing all this. I believe, as I said, this was surely a news item that caused this movement. So from this point, we got stopped out at the 23-950 zone. So this, I believe, this is the 25. 23,950 zone, where price already reacted from there before, pushed up, and then we now have a retest of this zone. So retest of this zone. So looking at a price now on NAS, we can see that we had this area. Oops, let me draw it properly. We have this low point taken out. So this is a breakup structure or change of character. We are on the 4-hour time frame. So ideally, if we go on a lower time frame, we will have probably a change of character somewhere here. So on the 4-hour time frame, we can see that here as well. So this coming week, we expect price to react from this key level zone, the 23,950 area, coming back, making some moves to close all these liquidities. What am I drawing? So we expect, let me draw it properly. So we expect price coming back to close or to fill these imbalances and probably tapping into this area where it originated from. So as we also know, NAS is been on an uptrend. It's been on an uptrend. So this is the zone. Let me mark. I know all my lines will appear now once I start marking on this. Yeah, there we go. And let me clean the charts so that it will be clearer. Yeah. Okay, so on the 4-hour time frame, let's do some bit of refinements, as we haven't been refining from the top down for some time now. So that is our supply zone. And then we can also see that this is the breakup structure or change of character, whatever you call it. Whatever it is, there was a break. Whether a break of structure or change of character, there is a break. Okay, so we have this break here, and then attached to this supply zone, we can also identify this big area of imbalance or liquidity void where the buyers were not given any chance at all to say their or to share their views. The sellers took complete control, not giving the buyers any chance. So that is why it is an imbalance. So there's market inefficiency here. So this coming week, whatever it is, we'll expect some form, or when the markets open, we expect price to do something like this and then tapping into this area. So surely if we're going to have a sell-off, then this is where we'll be targeting to take the sell from. This is where we're going to be targeting to take the sell from. And again, we know NAS as it is has also been in an uptrend for some time now. So even at all, if we're going to engage in any sales, we are going to do that with confirmation entries. Where from this zone, maybe we'll put in a low here, and then once we make our way back here, so the confirmation entry is where we want to see that this low that was put in is taken out, and then we get into the trade from there if at all it's going to continue going down. So our entries that we want to see if we want to sell this market is going to be from here. We want to see this low if it gets put in. So this will be a change of character. So if we have a change of character here, so we want to trace it back to the origin. So the origin might be somewhere here. So if this is the origin, if the origin is here, our stop loss goes there, our entry goes there, and then we could be targeting the previous low points first of all. So this is one scenario. Or we could have price continuing the uptrend from here. We could expect, or we could see price making its way, breaking above this high, and then coming back for a retest to the upside. So if we have this scenario where we get this level taken out, we want to take a buy from here going to the upside. If we have price coming all the way here to this level, we want to take a sell from here with a confirmation entry to the downside, because the reason being that NAS is been on an uptrend. So if it's truly giving us a sell or beginning a sell trend or downtrend, we want to get into the trade with the confirmation entry. I believe this is clear. I believe this is clear to all of us. Any questions, guys? Any questions? Right. If you have any question, you can put it in the chat quickly so that I can handle it before we draw this session to a close. Perhaps you are here, you haven't subscribed to the channel yet. Make sure you subscribe, and then also invite your friends and families to join us. I believe it will be a blessing to them. Be a blessing to them. Yeah. Okay, so I think this will be it for today. We've gone past an hour, and thank you so much for joining me here today. I believe you've had some value. You've learned something new. I believe you've learned something new today. So thank you once again, and then catch you up next week, same time next week. Until then, bye and stay blessed. Have a wonderful trading week. Thank you, guys.